Episode 11, baby.
We're back.
Special guest.
Yes.
Who is she, guys?
I'm excited to pick your brain.
Alex has been like jumping up and down. She's like, I can't wait to ask her everything.
Everything.
But honestly, it's $1 million question.
Who brought this pen into my house?
What is my prepayment privilege? You know, a lot of people, it's just all about the rate.
I feel like you're going to have the same opinion.
The first thought you have, mortgage related, or do you think about anything else when you wake up?
I feel like I could have talked for like another half an hour.
You're a natural.
And then what's one thing you can't live without?
Episode 11, baby.
We're back.
Episode 11.
Woohoo.
More guests. This is so
We
exciting.
have an amazing guest today.
Yes.
Nobody can see her yet because we're going to do a drum roll. Special guest.
Yes.
Who is she, guys?
Well, we'll let you do the introduction.
Okay, so she is somebody very close to my heart.
Oh.
She's actually my sister, everybody. But not only is she my sister, she's been with RBC for over 17 years now.
17 years.
She's a preferred partner with the Fresh Approach. She's a mortgage specialist. She's one of the smartest people I know. I could just go on and on and on, but we're excited to have you here as our special guest. We've actually wanted you on for a while.
Yes.
Yeah.
Yeah.
Well, thank you for having me. I'm super excited. I loved this little intro with my little brother telling me all the wonderful things about me. So
I
thank
didn't
you.
even say much. I could keep going.
And it's
though.
on camera, so you have it for life.
How long do we have? Half an hour? Keep going.
I actually wrote some things down. So you're an RBC Mortgage Specialist, convention winner. You take pride in giving the best advice. You work with first-time home buyers, renovation, financing, debt consolidation, investment properties, pre-approvals. You pretty much do everything. New people to Canada, ports, and also what people don't know is she gives back to the youth. She goes on these crazy long runs where she raises money, and she doesn't tell anybody about this, but she gives back to the community that she's in. So that always touches me. But yeah, you're awesome, Colby.
Yeah, thank you, guys.
That's amazing.
Yeah, I'm
great
really excited
intro.
to be here and, have this conversation as well. Have a lot of great things to say about you guys too. Like I've known you guys for, I think it's 6-7 years now. So that I've been working with Fresh Approach, and it's amazing. You guys are doing incredible things, and this new chapter, the podcast, is amazing.
Well, we're excited to pick your brain. I'm excited to pick your brain.
too.
I don't know about you guys, but this is going to be juicy.
Alex has been like jumping up and down. She's like, I can't wait to ask her everything.
Everything. I don't even know where to start. I don't even have a list of questions.
I like to keep it fun. We always have these predictions, and Alex has been on the ball every single time. We call her our economist of choice right now. But what do you think is going to happen in September 24th? The rate announcement's coming up. Do you think we're going to be holding, going down, or going up?
Wait, pause before you answer that. It's September, October, and December.
Yeah.
So what's your prediction for all three?
So I'm going to have like RBC backing me up on this too.
Okay.
Right? So we saw the ones that happened in June and July.
Yep.
We had 2 cuts. It was exciting, but it didn't really do much with the housing market, right? It didn't like ramp it up as much as possible, as much as we thought it was going to be ramping it up.
Yeah.
So this one, we're actually predicting that there's going to be another 25 basis point cut in both September and October.
Cool.
Not enough data to decide on December, but for the next 2, we are anticipating 25 basis points for each.
Because I remember in the beginning of the year, or even when the economists were making their predictions, they wanted at least 0.75 by the end of the year.
Yeah.
At least. So we're at 0.5,
Yeah.
right?
Do you think there's any chance of them doing a cut higher than a quarter point, like a half a point in September?
No, I don't really think so. Like, I think quarter is usually what they typically end up doing. Originally, I know there's a lot of like talk out there that it might be 50 basis points, but I think if they end up doing something that's big, it could basically cause an issue with the market again, right? It can actually get people to start getting back in too soon and then cause that inflation to like peak up again. So I think they're being very cautious. Bank of Canada, their main primary mandate was to bring down inflation, and they've been doing that by increasing the rates and then slowly bringing them down. If you saw at the beginning of the year, they did have that cut, and then it kind of drove the market a bit, and then they put their brakes on, right?
Yeah.
So they're being cautious, but, data is being released month after month, and it seems like we're in a good place. So, yes, 50 basis points at minimum by the end of the year, but just not all at once.
Yeah, they definitely, I like to say, learned their lesson with dropping rates so drastically and then raising rates so drastically.
Yeah.
They've learned their lesson, and I don't think they're going to be doing that again. They're going to take their time and evaluate everything month after month.
Yeah.
For sure.
But honestly, it's $1 million question. What's happening with rates? If I had $1 for every single time I asked this
How
question,
much would you have?
yeah, I'd be rich.
How
I'd be
much?
retired, every single day.
Yeah.
Every single day I get a phone call about this, and it's on top of Canadians' mind.
Yeah.
Yeah.
Right?
So, well, before we should have asked you this before. We want to know who you are and why you got into mortgage, being a mortgage specialist, and why RBC.
Yeah.
Okay, well, I went to school for biology.
Oh wow. Okay.
Yeah, Bachelor of Science right
Completely.
here.
Bachelor of Science, U of T, and I always wanted to be in some type of medical field or whatnot. And at that time, I just felt like, there's so many different opportunities. I feel like us coming from a small town, all we ever knew about was doctor, lawyer, engineer, and that was it. So we came from a small town. I moved here to Toronto for university, and then I just saw that there were so many different opportunities that are out there. So I did end up initially I got a job with RBC to pay off my student loans, right?
Okay.
That's literally what it was.
Yeah.
I'm like, I need to pay off my student loans. I applied and I got the job, and I worked my way through. But as I was actually working with RBC, I realized how much I liked credit. I realized, you can help Canadians in different ways as well. And when it comes to purchasing their home, or even at that time, it was something as small as purchasing their car. So when it comes to on the banking side, there's either you're going to be helping clients with investments or you're going to be helping clients with credit. I loved credit.
Yeah.
So started with RBC 17 years ago. And then around 2012, I started doing mortgages, and I was just like, this is fun.
Yeah.
It's not as simple as just, adding in a couple of numbers on a spreadsheet. You're actually building cases sometimes and trying to mitigate for people to get into this house when they might be on a border, right? From qualification. So it's fun, it's exciting, and I just love it.
And you haven't stopped since.
I haven't stopped since, no.
Awesome.
What are some things that people should be doing so that they have a better case to get a mortgage? Are there certain things, if I want to buy a house right now, I'm a first-time home buyer, what are some things that I should be making sure I'm not doing?
Some of the things, maybe not go buy a car right when they're about to start looking for a house. There'll be clients that will go out and they'll lease a car with a $900 payment or even a car loan. And it's just, what they don't understand is even if that loan is only $10,000, but if their monthly payment is $600 a month, we're looking at that monthly payment against your income. Right? So one of the major factors that we're looking at is a total debt servicing ratio.
Okay.
Right? So when we're looking at that, we're looking at your income
Okay.
based on in comparison to your monthly obligation. So now for every dollar that a Canadian's earning, we only want about 40 to 44 cents of that dollar to be going towards paying off their debt.
Okay.
The rest of it, you need to live, right? You need to buy food, you need to put clothes on your back, you need to get to work, buy gas, a lot of other things. So 40 to 44 cents of that dollar should be going towards all of your total debt servicing, right? So a lot of clients think, okay, it's just a small car loan, but that monthly payment is going to, affect them. The other thing is credit. I have a lot of client coming in saying my credit's great, but then their score might be okay, but then they have everything maxed out. That again is going to take away from how much they can qualify too.
The utilization.
Yeah.
Got it.
Yeah.
Okay, well, no cars for all you first-time home buyers out there.
Buy a car after you get the keys.
Yeah. As soon as you get your keys, walk into that dealership.
buy a car.
Yep.
Would you be mad if I had a TD pen right now on set?
Gosh. Oh my gosh.
Okay, I'll only bring this up. I told you guys earlier.
Yeah.
I just walked in with this pen, and she was like, "Who brought this pen into my house?" I was like, "What just happened?" And I was like, "What?" And she's like holding a pen. She's like, "This does not come into my house."
So there's
She was
this
joking.
thing. I wasn't joking.
Oh.
I really wasn't. There's this thing, when you work at RBC and you're a proud RBCer, you bleed blue, you drink this blue Kool-Aid.
Yeah.
I'm one of those. 17 years, I'm a lifer so far.
Yeah.
But he walks in with a TD pen, and I was like, or BMO And I was just like, buddy,
What are you doing?
like, get this out of my house.
I think that's when I was on The Amazing Race, and the BMO Bank had just sponsored that
Oh,
race.
yeah.
So there were, I just had a bunch of BMO swag,
Yeah.
and sorry about that.
No, it's
I've
okay.
never done that again.
Yeah, he never did.
Never
Oh,
did.
yes,
I'm
okay.
actually the one that I launched those into
Into the garbage.
orbit. Yeah.
I wanted to ask about the renewals right now, because we know that renewals are huge. There's billions and billions coming up. Obviously, the remainder of this year going into 2025, and then everybody that bought a house in 2021 who got the 5-year fixed low rate is obviously coming up in 2026. What is the bank or the branches seeing now for renewals, and why are branches being so aggressive when it comes to rates?
So are you saying what are people seeing in terms of rates?
Yes.
Okay.
Renewals.
So with
Banks
renewals,
are also being really aggressive, right? Compared to
Yeah.
the broker channel, there's
Yeah.
lots of competition.
yeah. So I think a lot of the banks right now are trying to find market share.
Yeah.
So most of the book size right now is going to come from the renewals, right? As you guys know, on the real estate side, things have dampened a bit. You know, the sales aren't there as much as they used to be. People aren't buying as much as well. So banks are looking for renewal opportunities, right? So if you have a mortgage with TD Bank and I'm sitting here on the side of RBC, I want that mortgage, right? So they are going to be as aggressive as we can. Now, they're giving a lot of amazing incentives as well.
Yes.
Like there's banks that are giving cash for switching your mortgage and for purchasing. And then RBC on top of the cash is also giving all your switch costs being covered.
Yeah.
On top of and except for a penalty, right? And then on top of that, they're also giving points for travel. So 55,000 Evian points, which is up to a $1,100 ticket.
Yeah.
So all of these banks have all these incentives, but I think the main reason is banks want market share. So there are some banks that are going to be a little bit more aggressive than others. And rates right now, we're typically seeing, even though they're posted, like if you go to our website, you're going to see 5.09, 5.19. But typically in the market right now, we're easily seeing 4.79 to about 4.89 on a 3-year fixed. Yeah. And that's even on a 30-year amortization.
Wow.
Yeah. And it's a good time at renewal.
For insurable, right?
Yeah.
Yeah.
No.
For insured as well?
For insured, like for a high ratio mortgage, you're actually getting a lower rate. It's about 4.54.
But still 30-year am or
25. Yeah.
Yeah.
But
Sorry,
yeah.
guys. We're just talking.
No, that's good. I wanted to get your opinion on first. I know you deal with a lot of first-time buyer clients. What are some of the major hurdles that you see for first-time buyers getting into the market from a mortgage standpoint? Is it like qualifying for a mortgage? Is it down payment? And what's kind of the average age that your clients are on the first-time buyer side?
So the age gap has grown a bit. So it used to be that we used to have a lot of like 25 to 30-year-olds buying their first homes. Now I've seen the ages that kind of increased. And the main downfall for a lot of these young buyers is a down payment. So for example, myself, I bought my first house in 2014. It was a $450,000 townhouse, and I put 20% down, and it was $80,000. Now this similar townhouse is going for $1 million in a span of 10 years, right? And now this same client, instead of $80,000, they're having to come up with $200,000 as a down payment. So that's a huge challenge for first-time home buyers, or like young buyers that are trying to get into the market. A lot of times parents have to help them, right, with the down payment from their equity that they've built in their house. So we'll look at refinancing their house to take that down payment to give to their children. But yeah, it's challenging because right now with the labor markets going down, the people that are impacted the most are Canadians under 35, right? They're accounting for 80% of the rise in the unemployment rate.
Wow.
Yeah, which is huge. With the last economic downfall that we had with the global markets dropping, it was only about 50%. Yeah, so it's a huge difference.
Are you seeing a lot of people come into the branch and want to do a refinance, or more people coming in because they're at renewal?
A mixture. Yeah, so refinance isn't just you taking equity out of your house to pay off a debt, right? That's typically people will come in. So refinance, just so just in case.
There's a lot of people watching right now that probably don't know what a refinance is and why they should be doing a refinance.
Yeah. So a refinance is basically you changing your current mortgage term into a new one, right? You're just replacing your current mortgage with a new one. And at that time, you can change your rate, you can change your term, and you can change your amortization. So I've had some clients that have a certain mortgage, but they're only refinancing just to reduce their payments. They're not asking for any extra money, and they're at 20 years amortization. Their variable rate went up, and now their payments are a little unbearable. So they're taking their mortgage back to 30 years. That's a simple, you're taking it back. Now they have more cash flow.
Is there any penalty? Sorry for cutting you off. Is there any penalty to refinance?
There is if you're not doing it at renewal.
Okay.
Right? The other opportunity that clients have during a refinance is to take the equity out of their house, and they can use it to put their kids through university, renovate their homes, do some landscaping, purchase a Tesla. Like we've seen that a lot. Like clients will take money out of their home to buy that Tesla. It is kind of funny. It's like, okay, maybe the rates are better. They're able to amortize over a longer time. Yeah. But then even stuff like purchasing another investment property, right? So lots of different strategies that clients have.
Could you go through, because I know all those are good options for refinance. I know some people also choose to get like a home equity line of credit.
Mm-hmm.
Could you explain the difference between both and kind of what you'd recommend for each, like for the different scenarios?
Yeah, so they're essentially the same thing. It's just how you're going to hold the money and how, if you can qualify for it, right? So a regular refinance could just be, if you have a mortgage right now that's $500,000 and you need an additional, you can just blend it into your current mortgage and look at the rates right now and just have one payment, pay off all that stuff, and that's good to go. Now, a home line plan, which allows you to take out more than what you may even need, right? So for example, your house is worth $1 million, right? You have a $600,000 mortgage, but you can take out up to 80% of the value of your home. So you're allowed to borrow up to $800,000 on this property.
If they qualify.
Yeah, exactly. Now, if they qualify, but they don't need that money right now, but they just want to be able to have it available to, purchase that investment property, they can get a home line credit line, is what we call it. TD calls it a HELOC. And then just have it there for emergencies. And when they're ready to use it, we can pick up that $200,000 and either leave the funds in the line of credit, or we can actually take it and put it into a second mortgage segment for the client. So they have their initial mortgage, which is $600, and now they're purchasing another property. They need that $200. We'll do another segment for them, right? So they can keep it separate for whatever that purchase might be. But it's typically the same thing. It's just one just gives you access to the funds in a line of credit. One, you just use it right away, and you start paying interest on it right away.
Got it. Okay,
I think
that makes sense.
Everybody needs you in their life.
Oh, thank you.
There's just so much that people don't know how to kind of leverage these things to better their situations.
A lot of people, it's just all about the rate.
Yeah.
It's all about
I
the
agree.
rate right now, which can be extremely frustrating for mortgage specialists because one person is giving you, like you said, 5.09, but then the person across the street is giving you 5.04, and the client will just go to 5.04 just because that's what the rate is, right? They're so rate focused. There's a lot of people don't ask questions about what else can I get in that mortgage? What is my prepayment privilege? What is, I don't know,
Portability.
What are the perks that come with this mortgage? And a lot of people, like I said, are just focused on rate. And when it comes to home equity line of credits, the rate is a little bit higher than normal, right? That's inevitable. And some people just think, oh my God, the rate is 7%. I don't want that. It's so expensive. But you have to look at the bigger picture.
Yeah.
So it's just about education and
And that's only 7% if they're utilizing it, right?
if they're utilizing it.
And if you decide to keep it in the line of credit because you're going to pay it off in about 3-4 months, then it makes sense putting it in there. But if you say, hey, I need to go buy this Tesla, I'm going to go back to that. You need $90,000 to go buy this Tesla. Put it into a mortgage segment over 5 years.
Yeah.
It's the same as a car loan, and you
But
can
you
keep
just don't
it.
have that car loan and it's not on your debts. Your debt
Exactly.
servicing,
Exactly.
right?
It's on your home line plan.
Yeah.
Right? So you don't have to keep it in that 7.2% or 6.7, whatever it is right now. You can put it into a mortgage segment.
One of the big things we're always talking about is affordability.
Mhm.
And I know you just asked what's the biggest challenges, and that same $400,000 house is now $1 million. Well, there's all these new policies coming from the government. And one of the ones that we were looking at a couple weeks ago was the headline that the Department of Finance will allow homeowners purchasing a newly built property and who meet first-time homebuyer criteria the option of 30-year amortization for insured mortgages. We had a fun little chat about this. Ian, you had like some opinions.
Yeah.
Well,
I want to get your opinion
wanna-
before I
Okay,
I feel
yeah.
like you're gonna have the same opinion.
Well,
but we want to get
do
your
you
take
think
on
that
it.
this is going to lead to more affordability? Is this going to help? And
Technically,
to add to it, CMHC is also going to charge a 20 basis point increase in premiums for these extended mortgages. So what are your thoughts on this? This just went into effect August 1st.
yeah. So I actually did have a client that came in and was like, oh, like I'm going to be able to get qualified for $200,000 more because now, CMHC is doing this and, it's a better time for me. But then when you actually work it out, it's not that much of a difference, right? You're saving about $200 a month, right, in cash flow. But really, how much more does the client qualify for? Maybe another $50,000. So I think the main thing is it just kind of helps with people's month-to-month cash flow. It increases that by about $200, $250.
They're still getting mortgage insurance.
Yeah,
right?
Yeah.
You're still adding in the premium.
Yeah.
Yeah.
Your interest rate, yeah, they're adding on 20 basis points, but that's fair because somebody that's paying 20% down is still getting a much higher rate.
Right.
Exactly.
So
Which makes no sense.
yeah,
No one
so
does
it's kind of like, okay, now you have the benefit of giving less down and you're doing the 30-year amortization. There should be some, increase in the
Yeah,
interest
which-
rate for
which
sure.
makes sense. Yeah,
Otherwise,
yeah.
The other 20% down person's going to be like, what the heck,
What the heck? Yeah.
right? But
Yeah, you can't get it all and get a cheaper rate.
Yeah.
With doing all of that. It just doesn't work out that way.
yeah, the only thing is like the great thing with the program is if you don't have 20% and you do have somewhat of a down payment, it gets you into the market,
Yeah.
right? Over time, we're looking for appreciation in the properties.
It's just
Yeah.
new builds. So.
Yeah, it's
That was
just
my
new
that was my
builds,
big
yeah.
thing. It's that it's
That's
only
right.
new builds, and
Yeah.
that typically I don't do any pre-con, but like
Yeah.
my experience with pre-con from other agents is that every single builder requires a deposit of 20% when it's all said and done.
Yeah.
I have been seeing like more recently, and again, Christy and Jeff got like contracts with Mattamy where they're putting brand new properties on the market. So I mean, at that point, if they're going to MLS, then there's an opportunity for sure.
Yeah.
Which if that happens more often, then I see the opportunity. But
Yeah.
when it first came out and that wasn't happening, I was just like,
So
it
wait,
doesn't really make
the
much
30-year
sense.
amortization still qualifies on a new build if the builder is selling it. Oh, wait, sorry, my alarm clock. If the builder is selling it as a resale now, but it's still technically a new build. Like, do you still?
I actually haven't had that scenario yet.
Okay.
But as long as it's from a builder, it should qualify for that 30-year
30-year
amortization. But the minute somebody's purchased it
Yeah.
and now they're putting on MLS, no.
like an assignment. It can't be an assignment.
No, yeah,
no,
but
like
so
once
like,
it's actually, yeah.
if I have a client that just bought from a builder, but it was like the leftover inventory that was posted on MLS, but it's still a new build.
Yeah, that's still a builder.
That's still a builder.
Yeah, the builder is the
Unless
seller.
it went into somebody's name first.
No, yeah, it's
Then
in the
it would be
builder's.
resale.
Oh, so it can't get transferred to someone first and then
And then no.
you
So
have to be the first owner.
So
Yeah.
the Mattamy
Yeah,
homes
okay.
that are being sold, they're still Mattamy owned.
Is the
properties.
seller.
Yeah.
Exactly.
basically. Okay.
Yeah.
They're still the builder, hasn't content, and they're new builds.
Yeah, we still
But then it
consider
has
that
to
a
be
builder deal.
insured. It has to be under $1 million, right?
Correct.
Exactly.
So
Which
the
I
one
feel
in
like when you go
Mississauga,
further
If
out,
you're in
like
Windsor, you're okay.
even Niagara area,
Yeah,
like
Niagara, yeah.
there's opportunities for less than a mil for
Yeah.
new builds for
New
sure.
builds.
So I have a question for you. When you wake up, is the first thought you have mortgage related, or do you think about anything else when you wake up? I just want to know.
Mine is mortgage related.
Okay.
You'll know, like there's some mornings that I wake up and I'm like, oh my God, I just had a dream. I know how to do that deal.
Oh, wow.
And I will go straight into work, right? There's certain times that like you're stumped on a certain deal.
Yep.
You go to sleep and you sleep on it. And literally in my dreams, I'll come up with the answer. I'm
That
like,
is
oh,
so
that's
cool.
how I should load it. But yeah, you know me. I wake up, I do mortgages, I take breaks to eat.
Yeah.
And then that's
And I-
about it.
And I eat dinner and I go to sleep.
So
Yeah.
do you think that's like divine intervention? Do you think it's like some sort of wisdom coming through your subconscious at that point? Or is it just
I'm just a workaholic.
oh, you're just a work.
Yeah. I need to, honestly, I do need to do a little bit of, which, I should take from you because he's always doing like morning meditations and like mindfulness.
I did that this morning.
And I do
You are
look
the
at
zen
him.
of the group.
Yeah. And it's just like, I need to incorporate a little more of that in my life.
What would you, because we are nearing the end of the episode, so it does go quickly. What would you, if you had to give advice to someone who wants to get into the mortgage industry, would you recommend them starting off at a branch? Or, because I know you've never been a part of the broker channel, what do you think would be a better fit for someone beginning in the mortgage industry?
Well, the wonderful thing about RBC is they actually have all of the deals that come through the branch. And they actually give those out to RBC Mortgage Specialists, right? So RBC Mortgage Specialist only works with RBC.
They get their own leads. Essentially.
We do get some of our own leads. But at the end of the day, it's nice to be under a brand. So I know I keep saying, I bleed blue, I drink the Kool-Aid, but it's also the brand too. I actually believe in the brand, and I actually believe that we're the top bank in Canada and number one when it comes to being in market share.
Yeah.
And we know what we're doing. So it's nice to be behind a reputable brand than to start out on the broker world. But you're on the broker side.
I am on the broker side.
What do you think? Like, have you ever worked for a bank? Or?
I have not.
Okay. And what's your experience? Like, I've never been on that side. I just know that I feel like I have the comfort of being behind a great brand.
See, that's great, and I totally agree with that. And it's kind of the same when you're looking at a brokerage. Like when you're a realtor and you're looking at Keller Williams, it's the same as a mortgage agent looking at a brokerage. So you want to be behind the brand, the brokerage, the training, the facilities, all of that. But what I love the most is having so many options. Whereas at certain branches or banks, you only allowed their products. Whereas if I know RBC does have like you said, a B channel that they can do alternative lending. A lot of banks don't do that.
Yeah.
So it's nice if my client can't fit this option, I can go here and go here and go here. And I have multiple options to give them.
Yeah.
It's not just a one and done no. So I think that's a definitely added bonus to the broker channel.
Yeah. And then I feel with RBC, I have a lot of control over that application as well. So we have one-on-one phone calls with our adjudicators. And if there's anything that we need to talk to them about or try to explain to them why this client should be approved, like I said, about 90% of my deals that I am putting through to RBC are closing with RBC.
Yeah.
We have great policies when it comes to newcomers, self-employed, investment programs.
We should have a talk with RBC and let's work with the broker channel, but just my brokerage. We'll be an exclusive RBC customer.
Yeah. And then anything I can't get approved, which is a slim amount, we put through and we try to get a solution for the client through our alternate mortgage channel.
Yeah.
So,
and is that RBC or is that through another?
It's through RBC. So RBC has this channel. We actually have a very large cut in banks such as Home Trust, Equitable Bank, and we'll look at whichever bank whichever bank that this client is going to be best fitted or suited for.
Yeah.
And we have actually a premium rates as well because we
send them there.
Yeah.
Oh, okay. So it's not like an RBC.
No. It's an RBC person doing everything. So an RBC alternate mortgage specialist is dealing with the client. Then that mortgage specialist is going to go talk to Home Trust, and we have our adjudicators there. They'll get it approved, and then within a year or so, we'll try to educate the client on the things that they need to do so we can flip them back to RBC.
Even with self-employed as well, it's really hard to meet your ratios when it comes to the A side of lending, like the A plus, because you aren't traditionally paying yourself, right? If you're incorporated, you're paying yourself a certain way. How do you not evade taxes, but how do you pay less tax?
Yeah.
And 99% of the time, it's really hard for self-employed people to get on the A side.
Oh, this is so exciting, but I know we're almost out of time. But RBC also has one of the best self-employed programs.
Yeah.
And I've had a client that's come to me with $40,000 declared income and needed $1 million mortgage. Yep. I can do that deal, eyes closed, as long as a business is strong.
Is strong, yeah. If you have strong business bank statements, you can do it.
Other than mortgages, what excites you in life?
What excites me?
Okay, yeah. Are we gonna do our rapid fire?
We'll do rapid fire for sure.
okay.
But I know mortgages, get you going. They
Yeah,
get you on those runs. But is there
'Cause
something that
everything
you
is so
love in
different.
life right now that
Honestly, lately I've been spending a lot more times with my siblings.
Okay.
And it actually brings me a lot of joy. So like hanging out with Jen, my sister, my other brother, and then the other thing is working out.
Yeah.
You know me, I get my dopamine hit the
Yeah.
minute I go work out.
Yeah.
Love it.
Yeah. You guys actually work out at the same gym.
Oh, I'm not at Mavati anymore.
Oh, okay. Yeah.
I quit Mavati.
Oh no.
I'm just far away from it now. I
Oh,
moved,
okay.
And I was like, I can't justify not
Are
going.
you at Movati?
No, I got a good life.
Okay.
Yeah,
We have
my body's a nice gym though.
Mavati's
We're
almost-
wrapping up
Yeah.
the thing. Would you be
Yes.
open to coming on again in another future episode one day? Like,
sure.
Yeah, down the line.
This is fun.
Yeah, is it
Yeah.
fun?
Thank you for
Yeah.
coming on.
Yeah.
We want to do a rapid fire with you.
Yep.
So it's just first thing that comes to mind. Alex, do you want to kick it off and we'll just go?
Yes.
Yeah, or Ian if
okay.
you want.
I can go. I can go for okay. One movie you think everyone should watch, or your favorite movie?
Oh. I don't have any favorite movies.
That's a hard one.
TV show?
Friends.
Okay,
Yeah.
nice.
Okay.
Yeah, yeah.
What is one book you think everybody should read or listen to on Audible?
I don't read that much either.
She just does mortgages.
Yeah, I just do
You
mortgage.
have quite a few books, though.
No, I have quite a few. Actually, I'm reading The Mountain Is You. Right now, I'm reading The Mountain Is You. It's a lot about self-sabotage. Not that I'm self-sabotaging myself all the time, but I am reading about it, and it's actually like helping me through some certain things.
Okay.
But The Mountain Is You right now.
Okay.
Yeah.
Okay, mine's easier. Coffee or tea?
Coffee.
Oh, that was quick.
Yeah.
Early bird or night owl?
Night owl.
But when do you do your workouts?
Anywhere in between.
Oh, okay. So you're
Yeah.
not like I have to get up at 5 a.m. and do my
No.
workout. Okay.
I've tried that and I've failed,
Yeah.
and then I don't like failing. So now I just put it in anywhere.
And then what's one thing you can't live without?
I guess my cell phone.
Yeah?
Yeah.
That's fair.
Right.
Yeah. Well, that was it, guys.
That was
We are wrapping episode 11.
Yes.
killed it. Thank you so much.
You were a natural.
Yeah.
Thank you.
And
Love
where could people follow you? Where could people get in touch with you if they want to get a mortgage right now, want to talk about any of these things that
And we'll
we
put all your
discussed
links
today?
in our podcast so people can.
Yeah,
reach
so I'm
us
on-
Is there
well.
a specific branch you're at? Are you mobile? Where are you at?
So I'm a more mobile mortgage specialist, so anywhere, but I'm usually at the Darien McLaughlin branch in Mississauga, or just look me up on RBC's website. I'll be there.
Perfect.
Yeah.
Awesome. Thanks for coming in.
Yeah,
Yeah,
we appreciate
I
it.
feel like I
Yeah,
could have
it's like-
talked for like another half an hour.
Yeah.
It's like the
100%.
mortgage episode.
Yes.
Yeah, we could like really dive deep into your
Yeah,
brain.
there's so
We'll
much.
definitely have you back.
We'll definitely have you back before the end of the year because we'll see how the market goes
Yeah.
and
Yeah,
where the interest rates
and I
go.
need to have more fun, and then I'll be able to I'll be able to answer those rapid fire a lot more.
Once the baby's out, we'll have some wine and stuff flowing in our
Yes.
episodes.
Yeah, we'll have a
Yeah,
wine and cheese
absolutely.
episode or
And
something.
as always, Alex is going to end it off with the telling
Like, comment, subscribe, ask us questions.
and keep it fresh.
Keeping it
Thanks
fresh.
for tuning in.
Love you guys.